Welcome to the next video of this section. As you can probably guess by the title, this video will be all about the accounting equation, which is the basis of understanding accounting. Before we actually talk about the accounting equation and its components, let's start off with a simple concept. In every single business, the things that the business owes is always equal to what the business owns in terms of money. This makes sense because if your business owns more than it owes, then where did it get that extra money from? If it owns less than what it owes, what is the extra money that's being accountable for? That's why these two things are always equal. Now that we have that set straight, we can redefine some of these terms. The things that the business owns are also known as assets. The things that the business owes is split into liabilities and equity. Liabilities are what a business owes to other people, while equity is what the business owes to its owners. So here you have it. This is the accounting equation. No matter how much a business has in assets, its liability plus equity will always be equal to the same amount. Now let's expand a little more on assets. As I mentioned earlier in this video, an asset is something that a business owns and has economic value. Most of the assets that accountants work with are as follows: cash, accounts receivable, inventory, plant, property and equipment, land and buildings, investments, and goodwill. Now you definitely don't have to memorize these, but it's good to get familiar with these terms if you'd like to go more in depth into accounting. Common liabilities, or of course what the business owes to other people, are accounts payable, loans, wages payable, and taxes payable. Finally, the most common equity accounts are stockholders' equity, owner's equity, and retained earnings. So now let's go over some examples. Let's use the example of a bakery and say they're making cookies and need more chocolate chips. Now they go to the store and spend $50 on chocolate chips, and there's our transaction that we have to record. How would this affect the accounting equation? Well, by increasing their inventory of chocolate chips by $50, the business adds $50 to their assets as inventory goes under assets. However, they paid in cash, so they lose $50 of assets. So here you go. Overall, through this transaction, does the accounting equation still hold true? Well, yes it does, because the net change on both sides is $0. So now let's take a look at another example. Let's say I own a newly started e-commerce business. In order to gain capital or money for the business, I ask a friend for a loan of $5,000. How would this transaction look in terms of the accounting equation? Well, we have a loans payable account that gets increased by $5,000 as we owe that much to our friend now. And as you may remember, loans payable is a liability, of course. And we also gain $5,000 in cash. So you add $5,000 to cash. You add $5,000 to assets and $5,000 to liabilities, just as follows. And again, does our equation still stand true? Well, again, it does, because our added amount is equal on both sides. Therefore, our equation still holds true. Okay, so moving on to the final example in this video. As some of you may know, there's a show on CNBC called Shark Tank where small but growing businesses deliver pitches to rich venture capitalists who will then decide whether they want to invest in their company or not. Now let's say I grow my e-commerce business with a sort of creative twist and I present it to these investors on Shark Tank. Let's say Mark Cuban likes the business and decides to invest $50,000 in return for a percentage of profits in my company. I accept the offer. So now how would that affect our equation? I'll give you 5 seconds to decide, but of course you can pause this video as well. Well, clearly we get $50,000 in cash, so we add $50,000 to our assets. And since the investor gave us the money in exchange for company shares, we are giving him a form of equity or company ownership. So $50,000 gets added in equity as well. And of course, this equation still holds true because the same amount got added to both sides. So to end off this video, let's go over the key takeaways. So first, it's important to understand what the business owns is always equal to what the business owes, whether it's to the owners or the creditors. And of course, The accounting equation is simply just assets equal liabilities plus equity. Now that brings us to the end of this video, and thanks for watching.